Exactly, वही है कि वो
See,
ट्रिगर
all
होता
that
है,
is
वही ट्रिगर होता है
hindsight
कि
है ना.
Exactly, I know. वही मैं बोल रहा हूँ ना कि how do you? I mean, you can't just go every day and start looking at 10 company balance sheets.
Unless see, earlier
Somebody tells you that's a thing. Like if you get a whiff,
yeah,
then you start digging and then you realize, oh, dude, the
yeah.
problem is actually bigger.
Yeah.
That's the thing. Yeah. Good morning, everyone, and welcome to the Money Control live stream. You're watching another edition of Markets with Santo and CJ. Well, the earnings season is upon us, and the market's eye will turn to the sector that has been the biggest wealth destroyer, or at least among the biggest wealth destroyers in 2022. And I'm talking about the information technology space. Now, Santo, a lot has been said, a lot has been talked about the fact that IT services are going to slow down, the growth is under pressure, the US recession, EU recession, whatnot. And if you look at the commentary that has come out from IT companies after the June quarter earnings, I'm not talking about when they were releasing the earnings and they held con calls and that the commentary then, but I'm talking about all the investor conferences, all the individual meetings with analysts, and every report that came out after such meeting reiterated the same thing that they had talked about after the June quarter earnings. Now, if you look at the expectation, therefore, for the September quarter, it seems like IT companies are going to continue on the robust, revenue growth or top line growth performance that they have been doing for the past almost 8 to 9 quarters now. Expectation is almost a 2 to 5% sequential jump in revenue, Santo, in constant currency term for major IT companies. Of course, I'm not including mid-cap. I will focus largely on the major IT companies, which are the top 5. Apart from that, the expectation is that the commentary also will largely be in such a way that it will retain the guidance of FY23, especially for Infosys and HCL Tech, who do give out annual guidances. The expectation is that both of the companies will retain their guidance, Santo, for FY23. Now, looking ahead, what is the expectation in terms of commentary? Well, they will be expecting that the managements will indicate that labor cost is going to come down. That is something that has been a big talking point since the last earnings, because we have heard stories about variable pays not being given. There's been a slowdown in the IT job market, so clearly labor cost is going to come out. And also in the meantime, rupee has depreciated almost 4% against the dollar in the September quarter alone. That, of course, it is also mitigated by cross-currency headwinds because rupee has appreciated against the pound and the euro. But in general, net to net, it is expected to aid margins going ahead in the second half of FY23. And when you come, look at that picture, Santo, and you look at the stock performance, the Nifty IT index is down almost 30% this year. This is going to be, if we continue at this rate, this is going to be the worst year for the Nifty IT index since the global financial crisis of 2008. So clearly, I don't think risk reward is an issue. Valuations for me remain still quite attractive. Given the longer term growth trajectory till at least 2025, I think this is one sector that could probably turn around once the earnings come through.
So, CJ, I'll grant some points which you've raised, particularly that margins could improve slightly now that wage costs seem to be easing off a little bit. At least there's not the same kind of talent crunch that you had seen a couple of quarters back. The other positive for the sector, though at the margin, as you said, there are this cross-currency factors at play. You're still getting some relief on the dollar because of the depreciation in the rupee. But that said, CJ, even during the first quarter, the company's commentary had sounded quite positive. They had said that for FY23, the outlook is quite good. They are not seeing any kind of weakness. Demand is good and all that. And yet you saw the stock prices correct. Now, if you're saying that management is again going to reiterate the guidance for FY23, which they've already done once, and through the regular meeting with analysts, they've been saying the same thing.
Yeah.
But I don't see how that's really going to change sentiment for the sector. Probably yes, they'd been beaten down quite a bit, and somewhere at some point valuations had become reasonable, which is why you saw buying interest and the stocks kind of bottoming out. But that said, I'm not very optimistic about a big up move for the simple reason that you still have the worsening global macros to contend with. And according to Elara Capital, there was a big disconnect between the global macros and what the managements were saying in their commentary for the first quarter. Now that disconnect is probably likely to narrow down a bit. Now,
I have a skepticism there, Santo, because if you look at some of the reports that were coming out, even as soon as, as latest as probably the last week of September, when a lot of investor conferences were happening. Even then, the commentary, or at least the tone of the commentary, was almost similar to what it was in June quarter. And this is when almost 3 months had passed since June 30th, right? So there had a lot of changes had happened in the world. They still had time. They had client meetings. They still had conversations with their clients, and none of them really indicated any sort of slowdown in terms of the demand pipeline or in terms of clients looking to cut costs. I mean, the Mindtree CEO, when he was speaking at the Motilal Oswal investor conference, he indicated that the nature of IT demand itself has changed. IT has gone, away from being just, a support or a associated, a task to the main core revenue generator,
that's been
to becoming the core revenue
argument
generator.
for a very long time. That's been an argument for, from the time I had got into journalism and when the IT.com boom was in full swing, right? But despite that, you've seen many cycles over the years, and that really doesn't change, CJ. That's all that I can say at this point.
Possibly.
Valuations are looking slightly reasonable though, and according to Elara, their average forward 12-month ruling is almost at its at a 5-year
around the 5-year average,
around the 5-year average at this point in time. But at the same time, they are anywhere between 11 to 40% higher on a pre-pandemic basis. So that
but
again varies from
I
stock.
think, but then pre-pandemic, I think the comparison would not be fair, because prior to pandemic, I think the role of technology was a lot different compared to what has been after the pandemic. I think the pandemic has accelerated the technological adoption, the cloud transformation deals, and all those sort of things.
Definitely,
at least by 3 to 4 years.
I take your point, but at the same time, again, I think at this stage, what is happening is we are seeing market skepticism on whether the deal pipeline will be as robust going into.
Well, Santo, my last point on this would be, limited point on this will be, okay, keep the fundamentals aside for a second. I think the other trigger that could be probably helpful is that these companies, given the fact that possibly, as you say, that growth will slow down probably in FY24, I think given their last cash chest, they might start now looking at buybacks. Infosys already is eligible to do a buyback. There was recently a note, from one of the foreign brokerages where they indicated that it is possible that the company could look at a buyback. HCL Tech will probably become eligible by January to do a buyback. So I think buybacks again from IT sector could come back in vain. And I think that itself alone could probably provide some sort of support to the stock, if not, be a trigger for a major rally.
There you said it. You're talking about a support. The moment they start buying back shares, which means that they don't have enough avenues to kind of deploy it, right?
No, even if they have avenues, they still have, very large cash chests, a lot of these IT companies. So if they can give us something out of it, I don't think investors are going to mind.
Well, that said, let's quickly head into the market setup for this morning.
Well, Santo, the market is looking a little muted at this point of time. If you look at the SGX Nifty 50, it's indicating almost a flat to negative start for the Indian market. Well, the Qs also, the handover from US markets yesterday was also not that great. Wall Street was down about 1%, over the night, largely on a very, very hawkish commentary from some of the Fed members who were speaking. They just continue to reiterate that right now, the way it is, the communication between Fed and market is, Santo, that Fed is like that, stop, give up on this hope that we are going to cut rates next year. It is not going to happen. The inflation fight is long and it is very hard. But the market is, on the other hand, telling the Fed that we are going to call your bluff next year. You are going to come to the market, you're going to cut rates, and believe you me, this is going to happen. So I think this is a very important tussle that is happening between the Fed, what the Fed believes and what the market believes, and clearly that can be reflected in the strong dollar yesterday, which I possibly hope, expect would also weigh on the rupee today, which is, hovering near the record lows. And let's see if we see the record lows today.
Well, it's likely to be a volatile market for some time. The focus now will shift to second quarter earnings commentary starting next week. And you're not been seeing any consistency in FPI flows also. Yeah. There was some brief hope of revival towards the end of August, early September, but that also now has changed with worsening global
Yes, and just to interject you, I think the rupee has hit a record low at this point of time. We have hit a record low of 82.32. So the 82 mark has been blown past this morning. So let's see how that affects, the equity market today. It'll be very interesting. That said, Santo, let's quickly move on to some of the stocks. And you have one giant of a name.
But starting with L&T, this is again a stock which has done well in uncertain, turbulent markets. It's been a bit of a defensive play in that sense. Now, its construction arm has won a major order from an automobile firm.
Okay.
Besides that, if you look at over the last 2 months alone, the company various divisions have won close to about 6 orders, which shows that there is clear consistency as
True.
far as the order flows goes. Now, the global market for hydrocarbons, that's close to about $25 billion, out of which $5 billion is the addressable market for L&T. Besides that, $3 billion of heavy engineering as well. And the other major area for L&T at this point in time, a growing market for L&T, is the heavy engineering, renewable based heavy engineering segment, which is growing at close to about 20%. And in the hydrocarbon segment, while we are not seeing too many refineries come up, L&T's focus again seems to be on the value added petchem segment, for which there seems to be plenty of scope at this point in time. The stock has been a steady performer, but in an uncertain market, this is the kind of company that one would like to stay invested in.
Well, Santo, for me, I think the fact that L&T is just about, I think, 6 to 7% away from its 52-week high suggests to me that probably the upside from here on could be a little limited, given just on the fact that technically, given such a massive rally has happened over the past year, it is very likely that the stock might look to consolidate a little bit going ahead, and maybe then you can see, if once the weaker hands are out, you could see some more gains going ahead in the stock. Apart from that, from a fundamental point of view, clearly the focus will remain on execution as well. Order inflow is great, but of course you make money on the execution of the projects, and there of course L&T in the June quarter had pointed out how the higher cost, higher raw material costs and all were affecting. Yes, sequentially cement prices have come down, steel prices have come down, so that clearly should be a benefit on a sequential basis. But we will have to wait for the management's commentary on the raw material side and whether that is affecting project execution as it was in the past few quarters. Well, the first stock on my radar today is Titan from the consumer space, and well, the stock is likely to have a very good session, most likely, given the robust performance, Santo, we have seen for the second quarter. If you look at jewelry segment, which is the biggest revenue generator for the company, over 18% year-on-year growth in sales. And now let's not forget that the Q2 of last year was also a high base for the company, given that it was the first quarter after the second wave and there was a very huge demand, especially led by the wedding season. So clearly a very, very strong performance on the jewelry side. But the wearables and watches, the segment that the company is trying to revive once more, Santo, after the late Rakesh Jhunjhunwala had actually advised the company in one of the conference call. I remember that you should look at reviving these businesses. There also sales growth has been more than 20% on a year-on-year basis in the second quarter. So for me, I think, given the the larger trend, Santo, of the shift in market share from unorganized players to organized players, and you can see it in the net store additions of Titan, which were quite robust in Q2. I think this is one stock to hold in your portfolio for some time to come.
Well, I have no dispute as far as the fundamental side of the story goes. You saw some really blowout numbers during the June quarter, which is expected to continue again in the September quarter and probably in the December quarter also. A, due to festive reason, and B, again the wedding season.
Yeah, in the rural areas, wedding season will definitely
exactly. And the shift of shift from unorganized to organized is also a story that's been playing out, and Titan has been clearly gaining from it. My only quibble at this point is that valuations again. How much would you pay? And whenever market takes a turn for the abruptly changes course, you've seen that being a high beta stock, stocks like Titan do take a beating. We saw that sometime in April, we again saw that in June twice, very sharp drawdowns there. So if you got the stomach for that kind of
I think, Santo, I mean, when a stock like Titan, which is richly valued, I mean, there is no denying the fact that Titan is richly valued, much like a Bajaj Finance out there in the finance space. I think you have to take that in your stride, because you know that while you are seeing losses, you are also likely to recover a lot of those losses once the tide turns in the market. So for me, I don't think I'll be bothered about that.
Well, next stock on our watch list is CMS Infosystems. Now, India Infoline has initiated coverage on the stock. Now, the strong points in favor of CMS Infosystems is that it got the leadership in the cash management market, and it's got a growing presence in the ATM managed services market as well. Besides that, now cash management, ATM management is 68% of its overall business, but besides that, it is also expanding into tech solutions like remote monitoring and software, and this one company which will benefit from the increased rollout of ATMs, given that banks are also expanding the branches, particularly in rural areas. IFL has a buy target on the stock with a price of 386 rupees.
Well, Santo, that seems a little conflicting given with the way people are shifting to UPI and digital payments. It seems a little counterintuitive that banks will actually be wanting to open more ATMs, because my personal experience being in a metropolitan city like Bombay is that actually ATMs are running out of cash these days. You just go to an ATM and it's very likely that you will probably not have the ATM working. That said, let's quickly take a check at the market with the opening bell hitting, and clearly it has been a weak start, down about 33, 39 points at this point of time on the Nifty, Santo.
And we're seeing but good strength in mid caps and small caps once again. 1200 stocks up on the NSE and less than 600 stocks down at this point in time. Nifty mid cap also under pressure, but down marginally. Nifty Bank down by about 0.7%, but it's just the start of the session, and considering that you're seeing pressure in the rupee, it remains to be seen.
Yeah, I mean, you have to wait. You have to wait for the initial 15 months for the initial trades to settle down a little bit to get the picture of the market. But it does seem like we are starting off on a weak note. Whether we will find a defense around the current levels, the support levels that we have around 17,250-ish, 300 level, that remains to be seen. Yes, there has been a humongous amount of calls written, Santo, at 17,300 and 17,400. So clearly, call writers don't expect the market to move above that level, and they're going to fight really hard to against the bulls to defend that level. So therefore, this weakness probably shows that resistance at this point of time seems to be very high around that 17,300 level. Well, Santo, coming back to CMS Infosystems, yes, of course, that counterintuitive thing is there. Apart from that, I think if you look at the stock from a technical point of view, also it looks like the recent gains in the stock maybe have pushed it a little bit into the overbought territory according to some of the technical indicators. If you look at the relative strength index or the the money flow index, both of those, which are momentum indicators, are now hovering above the 70 mark, which traditionally tells you that there is a pullback right around the corner. So I would probably wait for that pullback to happen if I want to take position here. But yeah, a profit booking seems very likely going ahead.
Just one point on that fact that you mentioned about increasing use of digital payments and UPI, but that said, still, even after demonetization, if you look at the value of the notes in circulation, that was around 16.5 lakh crores in 2016.
That's a good point.
It's risen to about 32 lakh crores. So cash, maybe it's a dying business, but that's still some time off. It's the same way people had predicted the demise of the fossil fuel industry, right? 10 years back.
Well,
so
Santo,
at some point, maybe we'll get there.
Yeah,
but
it's a correct point. I think if you look at cash in circulation, we are still at probably levels before demonetization already. So I think clearly Indians' love for cash has not died, even though we are using other means, of course, of payments as it is.
And you yourself went into an ATM for all the digital payments. You still, that's what you said, right?
Yeah, I did, because there are certain people I can pay, through my phone, and there are certain people that I have to only pay,
as long
cash.
as there are such people, probably companies like CMS Infosystems will make
Possibly, that's true. Anyway, talking about technology and digital payments and whatnot, the last stock on my radar today is Nika from the newest tech space. Now, Nika came out with an announcement overnight that they have expanded their footprint into Dubai and the Dubai fashion arena, basically with a partnership or strategic alliance with Apparel, which is a big retail chain there. Now they are going to open up omni-channel stores just the way they have in many of the major cities in India. They're going to open Nika stores there in Dubai in partnership with Apparel. So clearly this is going to be a very, very big strategic move that Nika is making, Santo, not only in terms of a strategy to move into omni-channel, but also expanding its market, addressable market, not only into India but also into the global arena as well. Now, if you look at this partnership, clearly from a strategic point of view, it is likely to aid both the earnings of the company as well as the margin profile, because Dubai is a high margin market. Generally, you don't see low cost products being sold there. Of course, it's one of the fashion hubs of Europe and Asia because of its geography. So clearly, this is going to be something that will work out in the long term for for Nika. And overall, also given the correction that we have seen in tech stocks, Nika's valuation clearly are not a concern. They still remain quite attractive in my point of view, Santo, given the growth trajectory that is ahead. I know you're going to laugh at my face for calling Nika attractive, but that is my point of view.
Well, valuations, again, of course, that's always debatable, CJ. I won't dispute that. But
you can always debate valuations, yeah.
Definitely. CJ. But here, in the case, in a booming market for the kind of market that we saw last year, that was the time when you had theme stories finding enough takers. Just look at the price performance of Nykaa over the last many months now.
Yeah.
You know, it's been clearly out in the cold there. So these companies have a long way to go around, improve their financials to a point where then valuations can genuinely be called reasonable. A couple of points made by ICICI Securities. One is that Nykaa is no longer the cheapest place for beauty and personal care products, and besides it has said that Nykaa has also not done much to fix the problem of authenticity. That's been an issue with not just with Nykaa but some of the
that
other.
That seems a little harsh. I think that's a very harsh assessment given, because a lot of my friends buy, Nykaa products. So I know from, my personal experience, anecdotal experience, of course.
Well, my daughters also buy from there, but that's beside the point.
That they have largely been quite okay. But I think I'll take the fact that, of course, not being the cheapest destination probably is a strategic move by Nykaa, because, when you come to the market, one thing that market wants is profitability and margins. And sometimes...
Yeah, but that is where ICICI Sec says that it's foray into the B2B business segment, maybe less profitable.
Yeah, that I think business to business was always very less profitable compared to business to consumer. So that is something that probably the market will have its eye on going ahead.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. I hope you enjoyed watching it. Please do remember to share your comments in the feedback section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen, and you know where to be when it comes to financial news. moneycontrol.com, and also you can download the Money Control app. We will catch you again live, of course, at 3 p.m. with all the day's action. Till then, have a great trading day. Santo, a compliment to you.
I can't.
Oh, acha.
That font doesn't work.
I am an avid follower of this channel. Both of you give a very balanced overview of stocks. Kudos. That's
both of us.
Largely.
नहीं है.
मैं blabber करता हूँ.
No. See,
आज का तो अच्छा था.
Yeah.